In this video, we are going to be analysing MACK. Now, this is up over 200% as we're recording this video. It's been a really big mover today. You know, around $4 yesterday. Now we're sitting around $12. Big movements. Now though, what is firstly this moving off? Because again, fundamentals are always the biggest driver. Technicals are all good, trading on a short-term time frame or whatever, but really fundamentals are always going to be the key driver. So if you're looking for a trading strategy where the fundamentals and the technicals line up, even better. But either way, if you're looking to trade off technicals, which I know a lot of you are, it's good to still understand the fundamental mover, so you're not really playing against the fundamental mover, because then really you are playing a losing game. Now though, what we can see, it soars after its phase 3 trial of pancreatic cancer drug candidate met its primary endpoint. So again, this is taken as very good news. Is it really going to justify 200% upside? To be honest, I would see the stock fading back. We do see this quite a lot. Again, markets tend to overreact, whether that's to the downside or upside. You tend to see an overreaction, and then you tend to see a rebalance. So yes, if you're trading it on the day, it's usually better to play to the upside. But coming into tomorrow's open, again, be watching this. I wouldn't be surprised to start seeing this start to fade a bit back down. Again, I don't think it'll go back down to that $4 basically instantly or very quickly, but I do think we will start to fade down. Again, it is just a pattern. So observing what you see with other stocks. I mean, the majority of these small cap stocks, the reason a lot of them move is they usually tend to be biomed stocks or just medical related stocks, and you tend to see them move on this kind of news. And again, how do they start to react after it comes out? You tend to see them spike for maybe a day, two at a push, and then you start to see them fade down again, come back into a bit more sensible levels. So that's the fundamental driver. Again, when you see a driver like that, you don't play against the trend. So even though I'm a short bias trader, when I'm trading small cap stocks, I would never look to short these levels. And you can see what today would have happened if you look to trade to short coming into these levels. Really, it just blew through all of these. I mean, you would have just taken a stop on all of them. And that's why it's really good to understand, if you were trading small caps, what is the fundamental driver. Now though, onto the levels. So now, where do we see it going from here? So even though, again, it's moving on the fundamental news, we can start using technical levels to start finding where is the stock going to pull back from. So really, above the level of $9, I am very bearish on the stock, and the reason for that is, to me, that is considered very overbought, and I would expect it to start to reversing down or pulling back and coming down to a more reasonable level, which to me, at a minimum, is $9. So for me, it would be something I would be a bit more short bias on, taking it down around 25% from where it's currently sitting. Now we can see they do have options, so again, if that's how you like to play them, that is maybe a feasible way to start trading it. But again, be looking at to trade it. If I was looking to do it, I'd probably be looking to do it through options, because again, I'm not a massive fan of shorting these small cap stocks, because they tend to have high borrow fees if you can borrow them at all. But then also they can move very big after hours, and if so, you don't want to just be getting that hit that stop, or sometimes the spreads are going to be so wide that just makes that stop very wide. So again, I tend to trade these kind of things through options if I can, or I tend to just stay away. But anyway, that's kind of my key target for now. If we continue down, what are going to be further down supports, we're looking at 790, 775, going lower be 680, 645, $5, 575. And really that final level, which is going to be that gap fill location at $4. So again, we don't actually have any resistance on it. If it continues to go up, it wouldn't be something I'd be looking to buy very overbought. Instead, I'd be looking more for that pullback, looking to trade back to a more reasonable level, $9 being that key level. Anyway, I hope you enjoyed the video. If you did want to drop a like and subscribe, and check out one of these 2 analysis videos.